Take note, if you need to snapshot, please do snapshot it right now because I'll be talking about it in detail, just on head and shoulder alone. Observation of volume trend versus price action. So can anyone tell me which theory this come from? I've spoken about it a lot of times today. Actually, I conducted a class on this as well when I first joined Homely the time. Can anyone tell me which theory is this from? Observation of volume trend versus price action. So basically, when the price keeps going up, the volume, is it going up or going down for it to be normal? Type your answer inside the chat group. I repeat my question again. If the stock price keeps going up on a healthy stage, should the volume actually be moving in tandem with the price trend or opposite? Okay. Opposite, you type OP, you type trend, TR inside the chat group. Okay. And which theory is this from? Ui says Elliot. No. Elliot took it off from someone. Who's that someone? Yep. Thomas and Theo got it right. It is actually from the Dow theory. Okay, one of the 6 tenets. You see, I have always been talking about very basic stuff only. I don't even want to go into the details of very, very complicated stuff. If you understand the basics and then you know how the stock market behaves, somehow people has been like, Dow theory is like more than a decade old already. All right, more than 100 actually. So basically, you know what's the funniest thing? It works until today. Because it's always about human behavior. They never change. It keeps repeating itself. All right. So just now I mentioned breaking of the neckline completes the pattern. So basically, once the price of the asset actually breaks the neckline, that's the end. And everyone answered it correctly. If a rebound were to happen, this will be your target area to take profit if you actually caught it over here. All right. And obviously, there are ways to identify where the support is. You can find congestion area of support. You can use the chip distribution over on the Homely chart. Okay, I will not be showing you today because I expect you all to know where it is and how to find it. All right. Areas like this. Okay, good. So then after that, the return move, which is this one. This is the return move that I was talking about, breaking the neckline. And then let's say, for example, you say, my goodness, after break the neckline, I didn't manage to sell. And then you know the next time it's going to meet back on the neckline. Always remember one thing, close your position thereafter. All right. This one, the head and shoulder pattern is a little bit not like what I mentioned earlier because you can see the neckline is actually slanting upwards. It can happen also. Okay. It does not mean that 100% that the head and shoulder must be going downwards one. But more often than not, on average, the statistics shows that it's slanting downwards more often than not. Okay. So then after that, moving on forward, finding the price objective. Now, why is this very, very important? The reason why I say this is because more often than not, all right, the price objective, if based on chart pattern, is always 100% value. Okay. So basically, where do you know you're finding the price objective? Like, you know, this is a normal head and shoulder. It happens right at the top. So you need to look for the downside target. Okay, the downside target. Now, looking at the downside target, all right, so basically from the head till the neckline, this is the length or the price range. Of this length, you know what the value is, all right? And then you project it downwards of equal length. Then you find your minimum target. The word is minimum target, not maximum target. Don't later suddenly when I say this, you all say, hey, he say met target already. So it's target ma, so you can actually buy it over here, pretty much. Let me tell you one thing. Minimum target met doesn't mean necessarily that it won't fall further. Okay? Even minimum target met on the way up doesn't mean it will not go further up. All right. which is the reason why you have to keep setting your trailing stop in order to protect your profits as well as your capital in the process. All right. And more often than not, because in this process, by knowing the price objective, you manage your expectation. So let's say, for example, you see head and shoulder, you know that, this is 100% head and shoulder. Let me tell you one thing, the downside target is this much. So this thing will actually go all the way down. When you reach there, let me see whether am I interested in buying it or not. All right. That's what I'm trying to say over here. Okay. It's managing your expectation. Same thing as it goes up. When you have an idea of how much range it should actually be completing, like let's say, for example, a range of this 100%, then you know that it is very likely to meet the minimum target. So when it reaches the minimum target, break, retrace, then after that, you know that this is your trailing stop. After you set your trailing stop, it continues to go up. Then you have probably another sign to set the trailing stop again, using various methods that you have learned in the process of or your journey of your technical analysis. Okay? Is everyone clear so far? Any questions? If you're clear, type the word clear inside the chat group. I'm not done yet. The head and shoulder, I'll be showing you on the price versus volume action in order for you to understand it better. If everyone is clear, type the word clear inside the chat group now. I haven't even pulled out the examples of the charts also. We even have enough time. Actually, I want to ask you one question. Do you all prefer classes like this on the weekend, or you prefer the classes like this? At this hour at this time? Type your answer. Is it weekend or is it weekday? Weekend or weekday? Because if it's weekend, more often than not, the class will actually start at about 11 o'clock, then you end at about 12:30. If let's say it's at night, it's from 8 o'clock until 9:10 only. Okay, very unlikely I'll continue 9:30 because I think your brain also cannot process the information already. Okay, so I see most of you actually prefer weekday actually. There's only one weekend only. Okay. Okay, no problem. If that's the case, I think it's very likely that I'll set the precedence in the case where Tuesday. Is Friday okay with you all as well? Friday night? If Friday night okay, just type the word yes inside the chat group. If no, then just type no. Just type no. Then I'll stick to Tuesday. Then at least you all have an idea. You all have an idea that every Tuesday is very likely a class that I'll be conducting. Okay. Friday, no, it's a mixed answer. Okay. Friday is a mixed answer. Okay. So I think probably we just stick to Tuesday first. Okay. If the class actually need to be created more in that process, then I'll consider Friday in the process. Okay. We can do a trial run on it because nevertheless, the replays are always there. So I know weekend class is not something you guys are very keen on. Okay. Can, no problem. All right. So the next thing I'll be talking about the relationship of the price as well as the volume. Now, if you notice that during the formation of the left shoulder, okay, you never know that it's a left shoulder. Let's say, for example, this never existed. Okay, this never existed. Now you see that when the price actually went up, in tandem with Dow theory, you can see that the volume actually was trending upwards as well. So there is congruency. Okay, there is congruency in what we learn and what we see. Now, the next thing is that when the price actually fell, the volume actually never exceeded. Okay, if you all have learned the method we talk about 5, 4, 3, 2, 1, 0, this method, this is applicable. And even let's say the 5, 4, 3, 2, 1 method, it is applicable at the bottom as well for a reversal. Because why? You essentially you are studying the price action volume. Then you're applying to it. I have conducted this class before. I hope you guys actually still remember, and this is applicable. All right. I will not be touching it today. Now, moving on forward, you can see right at the top, price and volume trend. Okay. They are in together, but when it's at the bottom over here, there is no exceedance of the historical volume figure. So this is good. All right. Basically, everything is normal. Price goes up, volume goes up. Price goes down, volume dries out. It's because it's a washout process as well. All right. And moving on forward, then after that, the next thing you see the price climb up, breaking out from the previous high, but and creating a all-time high, ATH, all-time high. The next thing you notice that the volume trend is actually reducing. Now, what do we call this? What do we call this? Is there a word for it? Not word lah. It's actually two words. Higher high price, but a lower high on the volume trend. What do you call this? Because this is two indicators essentially. So you're seeing something. What does it mean? Okay. It is actually a bearish divergence. Okay. It is a bearish divergence. So basically it is an alert. Okay. It's not a call to sell. It is an alert. So you actually should pay particular attention to it. Now, the next thing you know that because this was an area of support, this actually should be your trailing stop. Or you have a more detailed trailing stop in the process, then maybe you can use that. But otherwise, this is one of them. This is one of them. All right. Because more often than not, it's very unlikely you see this breaking further. Okay. And at the same time, notice one thing. Why drawing trend line is very important. You notice that the price also actually, broke the trend line over here. So you see here, there is two areas of stop loss. One, or otherwise trailing stop. Two, how could you not have closed your position entirely? Okay. This is the very, very clear signal out of it. Now, the next thing, after the neckline is confirmed to be formed, you draw this. Okay, this is not very accurately drawn. Okay, disregard it. And then the next thing you know that when it goes up, okay, you want to probably do a quick swing trade in the process. Okay, you know that this is one of your target. This one can be one of your target as well. Because this is where a lot of people will close their position, especially those technical people. Okay, so hence this will actually become another level of resistance. Resistance 1, resistance 2. Okay, so when you're done with this, then the price actually fell. The worst part, the completion of the pattern of the head and shoulder is when it breaks the neckline. Another sense of opportunity over here, target price, neckline. So basically there was two processes for you to make. One from here till here, or otherwise from here till here. And then after that, when the thing goes down, okay, formation of neckline, okay, you have 0.1, 0.2, you have 0.3. So there is 3 opportunities for you to make money just in one stop. Just in one stop through this pattern, if you observe correctly. The way I say it is it sounds very perfect, but let me tell you one thing. If you learn the method in order to find just very simple methods, like I said, just by drawing lines, you'll be surprised what you get out of it. All right. And I continue on. You notice that as the price actually dropped below the neckline, you notice one thing, that the volume actually is continuously trending downwards. Okay, it is not able to break the new high. That answers it all. That's number 1. And then after that, number 2, you can see that the moment it broke the neckline, the volume actually jumped up more than before. Okay, more than before. All right, more so, the volume actually keep increasing further. In tandem with Dow theory, the downtrend has begun. Okay, is everyone clear so far? If you are clear, you understand it very well, type the word good inside the chat group. Then after that, I will move on to the example to show you. Type the word good inside the chat group, then I'll move on to the example to show you what a head and shoulder stock